Hey, Jordan from PreConto here. Today we are going to talk about Calgary and specifically Calgary pre-construction. So in the last couple of years, a number of our Toronto clients have been investing in Calgary pre-construction condos because of better cash flows, lower closing costs, and of course, cheaper entry prices. We're going to go through the difference in investing in the GTA versus investing in Calgary, the markets, where they are currently, where they've been in the past, what returns look like in Calgary versus Toronto. And I'm going to cover this topic holistically. So I'm not just going to tell you that Calgary is the best place to invest in Canada. I'm going to go through the pros and cons because obviously if you're investing in Calgary from the GTA, there are some drawbacks that you need to consider. It's not just about the numbers. So let's dive right into this. By the end of the presentation, you should know if Calgary investing is for you or not for you and some of the best deals that currently exist in the Calgary pre-construction market. So the first thing I want to kick off with here is that Realtor.ca puts out a report every year on the most searched cities and neighborhoods for home buyers on their website. And last year in 2022, it wasn't Vancouver, it wasn't Toronto. The number one searched city for people looking to buy or rent properties on Realtor.ca was Calgary, a massive increase from any previous year. And of course, they are seeing massive inflows of intra-provincial migration as people are looking for better housing markets, more affordable markets to live. And we're going to go through some of the reasons as to why that is and why I think this is a trend that may continue into the future. Just a quick spiel. If you don't know who PreCondo is, we are active in the pre-construction market all across Canada. We have a team of over 20 agents. I've been doing this for a number of years. And of course, we are platinum pre-construction agents. So we get access to projects well ahead of the public and we help people make informed decisions in real estate investing and just in general in buying real estate for themselves to live in. So let's talk about the Calgary fundamentals, just the city in general. We'll start with, and then we'll get into some market fundamentals. The first thing I want to note is 2023's Most Livable Cities report was just released the other week. And as a Canadian, you should be pretty proud. We dominated the top 10. So we have 3 cities here. In spot number 5, you have Vancouver. In spot number 7, you have Calgary tied with Geneva. And in spot 9, you of course have Toronto. No secret that Canada as a whole is a very livable country. And really, when you put aside the high cost of housing, it's one of the best countries in the world to live. And that's why we continue to see, sustained levels of really high immigration. And I thought it was worth noting this because of course, Calgary is on the top 10. Now let's talk about the market and compare it to Toronto for a minute. So Calgary's market is very different to Toronto's, all right? It hasn't had the insane run-up in price that Toronto has. So if you look at the Toronto benchmark price performance over time here, you'll see that with the exception of 2017 and with the exception of rate hikes, currently, of course, the chart is pretty much up and to the right. And that's why people investing in pre-construction in the GTA have done remarkably well over the past decade or 2 decades or so. Now, when you look at Calgary's home price, it looks a little bit different. So you have some run-ups in price, and then you have periods of stagnation where home prices trade sideways for a number of years before running up in price again. And this is because Calgary's market tends to be more cyclical than Toronto's. Historically speaking, they rely on the oil industry quite a bit. And so when that industry is not going so great, the housing market tends to taper off and die for a few years before it rebounds again as those industries that Calgary is dependent on take off again. But I think we're starting to see a demographic shift where not everybody who's moving to Calgary is working in those industries anymore. The tech sector there is booming. Education is doing really well. And so Calgary as a whole is becoming slightly less dependent on a few industries and expanding quite quickly. Now, just to compare it, apples to apples here. If you look at the benchmark price for a home in Calgary in 2005, it was $209,000. And today it is $540,000. So representing a growth of 157% or 5.4% compounding annually. Most housing markets do 3 to 4 to maybe 5%. So it is on the upper scale of what you would traditionally see in most American cities, but compared to Toronto, it is obviously significantly lower. So Toronto went from 315,000 to over 1.1 million, representing 268% or 7.5% year over year growth. Now, there's really 2 ways to look at this. Some people might look at this and say, well, I'd rather invest in Toronto because historically speaking, it is the outperformer. It is the better performing market. Another way to look at it, and a way that a lot of investors are looking at it right now, is Calgary has underperformed Toronto, and that means there's more room for growth. Of course, I don't have a crystal ball and I'm not a fortune teller, so I'm not going to tell you what's going to happen over the next 10 years or so. I'm just going to show you the market dynamics as a whole, and you can make a decision on what makes more sense for you. If we look at net population growth for July 1st, 2021 through July 1st of 2022, it's no secret that last year was a record-breaking year for immigration, but I think what's really more interesting interesting is where those immigrants flowed, or where that net population flowed. So Ontario as a whole had a lot of net emigration intraprovincially. So we had a lot of people leave Ontario to go to more affordable markets. They went to the Maritimes, they went to Alberta, but that was offset by the massive increase in international immigration that we saw come into areas like the Greater Toronto area. What's really interesting on this chart to me is the second fastest growing city and the third fastest growing city on this chart after Toronto is Calgary and Edmonton. And while there is a portion of international immigration that lands in Alberta, the big factor here was the interprovincial migration, people moving from more expensive places like BC and Ontario to Alberta. Now, if I had to pick my favorite chart of this presentation, it would be this one. So this shows you the new households in Alberta versus housing completions across the province. So the pink line or red line or whatever color it looks like on your screen is of course the new household formation. And you can see that massive influx of interprovincial migration and some international immigration as well. And you can see all the new households flooding into Alberta. But of course, housing stock and housing completions isn't that elastic. It takes a while for new developers to come up. It takes a while for existing developers to scale up their supply pipeline. You, of course, have labor shortages and material issues. And this chart reminds me a lot of what Toronto has been going through over the past decade. Really, the story for Toronto and why Toronto investors have done so well really comes down to the fact that we haven't been building enough supply to keep up with the population growth. Now, Alberta has done a far better job of building that housing supply historically, but of course the question now becomes, are they going to be able to keep up with the new level of immigration? Because historically they've done quite well, but they've still managed over 5% housing appreciation year over year, even with bad oil markets and people leaving the province. Now you're seeing a situation where, of course, you're seeing far more population growth and the province doesn't really complete more than 10,000 homes a year. So can they build enough to support that new population growth? I would bet probably not. When you look at the RLB Crane Index, you can see that Toronto and Vancouver lead North America with 225 cranes and 214 cranes. So a massive amount of condo supply being built in Toronto and Vancouver, whereas Calgary is only seeing 32 cranes. And keep in mind, the crane index is a leading indicator of not where housing supply and completions are today, but where they're going to be in 3, 4, and 5 years. Because if you have a crane, you're building a condo, and if you're building a condo, it takes a couple of years to do so. And when you break it down a little further and you look at the density, so the amount of units being completed on those new housing projects, you'll find that in Toronto, the average number of units for a new build is 174, because obviously we're building a lot of high-rise, so that average unit density scales up. However, in Calgary, the average number of units per building is 46. So they're building a fair amount of new housing, but it's really concentrated in boutique low-rise buildings. And so they're not delivering nearly enough homes, and they're not on track to deliver nearly enough homes to support any sustained level of population growth, if it's anything near what we just saw in the past couple of years. And then we get to median income versus housing price, and Calgary is still very affordable. So despite the fact that the last couple of years, the market's done incredibly well, rents have pushed up 30%, housing prices have pushed up considerably as well, and you've seen all this population growth. At the same time, the average home price is still affordable by the median household income. So you can see here, Calgary's average home price of $518,000 versus their median household income of $110,000, still relatively affordable compared to Toronto, for example, $1.1 million home price, $96,000 median household income. Really two takeaways there. Obviously, Calgary is far more affordable, and so in theory also has more room for appreciation, which is one way of looking at it. And then another way of looking at it is just the median household income in Calgary is actually higher than the median household income in Toronto. And these two charts are just another way of looking at that equation, right? So if you look at the Greater Toronto area and you look at the average income versus the average home price, as of 2020, and we know it's gotten worse since then, but as of 2020, the average home is 10 times the average income. So it's obviously a very unaffordable market. Now, anyone who lives here, this is not a shocking revelation to you. Everybody knows it's very unaffordable. But in Calgary, they're looking at about 4x. Now, I believe because of the last couple of years, it's more like 5x now. But with that being said, it's still far more affordable, about twice as affordable as the Toronto housing market. And to give you a point of perspective here, something like Manhattan, for example, one of the most unaffordable markets in America, is about a 17x multiple. So the average home price in Manhattan is about 17 times the average income. Toronto's not that great, sitting at about I believe now we're at about 11x. Calgary's still very healthy at about 5x. Now, it's probably worth noting at this point in the presentation, you might be looking at all these metrics and go, well, why invest in Toronto at all? And the truth is, over the last decade, Toronto hasn't been fundamentally healthy by a lot of metrics, by rent to price and by income to price. Toronto's been a very unhealthy market that is quote unquote detached from fundamentals. Nothing cash flows at 20% down anymore. Income to price doesn't make sense. You have all these different reasons why Toronto investing doesn't make sense. But of course, when you continue to bring a larger population than you can build housing for, housing tends to still appreciate despite these factors. So I'm not here saying Calgary investing is the be all and end all, and I don't still believe in Toronto. The way I look at it is Toronto is sort of your blue chip market. And I've said this before, it's a great place for capital preservation. But if you're younger and you're looking to take some risks and grow your capital quicker, we're seeing a lot of investors look at places like Hamilton, Kitchener-Waterloo, Barrie, even Collingwood for better rental returns and properties that are more likely to cash flow neutral or positive. But the reality is, if you're looking at buying an investment condo 2 or 3 or 4 hours away from where you live, you may as well look on the other side of the country as well. Because if you're in Hamilton or you're in Barrie, you're still caught in Ontario's landlord and tenant board mess, and you don't have the advantage of living really close to your property, so you have to count on somebody to manage it for you anyways. Whereas in a place like Alberta, it's not like you're investing in Florida or you're investing in a short-term rental in Mexico. You still have the ease of financing of investing in Canada, but you get some more perks like investing in a landlord-friendly province, a province with far lower closing costs, et cetera, et cetera. So suffice to say, I think there's a time and place for both. I think it really just depends on your risk tolerance and what you can afford from a cash flow perspective. And speaking of income levels, I wanted to talk about the top 1% income thresholds. Now, obviously, when you're looking at a housing market, you don't really want to look at the top 1% because that represents a very small percentage, well, 1% of income earners, of course. But I think it's worth noting because a lot of people have the preconceived notion that Calgary isn't a rich city in the way that Toronto or Vancouver is. And I think that's a misconception. So Calgary actually has more millionaires per capita than Vancouver or Toronto. In fact, in Canada, Calgary has the most millionaires per capita. And when you look at the top 1% income earners, the threshold to be in the top 1% in Calgary is the highest in Canada at $374,300 annually, whereas Toronto is $303,000. So the high income earners in Calgary actually earn a notable amount more than the high income earners in Toronto on average. And just to drive that point home further, Calgary has some beautiful neighborhoods. Again, I've been all over the city. I love the place. Again, if you've never been, you really should visit. It's a great place. It's a great place to live. And I think that's why you continue to see people move there. But when you look at the richest neighborhoods in Calgary and you look at the average net worth and the average household income, you can see that there's a lot of wealth in Calgary. And I think it's inevitable that that wealth will continue to grow. Not only do they earn more than us, but they keep more because income taxes are, of course, lower. Now, we've covered a lot of great stuff about Calgary, right? So you're raring and ready to go. You're excited and you want to invest in a Calgary condo. Well, I want to present the other side of the argument. What are some of the negative points about the Calgary market? The first being ease of supply. Now, this is a positive thing from a livability standpoint and from just a health of a market over time standpoint. But as an investor, you're looking for supply constraints to help sort of artificially drive up prices, right? That's the reality at the end of the day. Toronto investors have done so well, not because we're geniuses, but because we continue to build too few homes. And part of the reason for that is all of the red tape surrounding new development. In Calgary, they don't have nearly as much red tape. So in Toronto, it takes on average 32 months to get a condo building approved and ready to build. But in Calgary, it only takes 5.4 months to get a condo building approved. Now, generally speaking, the condo density, so the actual units per building in Calgary is, of course, far lower. It's a much smaller building. So when you look at the Altus report and you look at the municipal benchmarking study for cities and municipalities across Canada in terms of how easy bringing new housing supply to market is, you'll find that Calgary is the third best in Canada, Edmonton being the first best. So they are far better than Toronto and Vancouver at bringing new housing supply. Now, 5.4 months isn't breakneck speed by any means. Out of 35 countries in the OECD, Canada is the 34th slowest to approve new housing. So by worldwide standards, Calgary is more or less kind of average. But by Canadian standards, it is one of the fastest markets to approve new high density housing. Now, a counterpoint to this may be that Toronto just approved additional units on basically all single family homes. So if you have a single family home in Toronto, you are now allowed to convert that up to a fourplex. So they just made it considerably easier for people to bring new housing supply to market, because previously, of course, it was either high density or single family, and there was really very few opportunities for the in-between. We don't really know how this is going to play out. This is brand new, but I wanted to bring this up because it is worth noting, Toronto is working on making it easier to bring new housing supply. So that sort of supply constraint may not always exist or exist to the degree that it currently does here in Toronto. So like I said, this is the best chart of the presentation. It's the most important chart to understand. Alberta is starting to go through a very similar thing to what Toronto went through 10 years ago. So some people might make the argument investing in Alberta today is like investing in Toronto 10 years ago. That remains to be seen. But the question then becomes, all right, so pre-construction investing in Calgary is relatively new. So for a point of comparison, I just wanted to bring this up. People always ask me, what is my condo going to be worth when it's ready? 3, 4, 5 years down the line. Of course, I can't answer that question. Nobody can. We would be billionaires if we could answer that question accurately and repeatably. So I think it's just worth looking into a little bit of history. Toronto has been an undersupplied housing market for a period of time. So how have pre-construction investors in Toronto done? Well, I've done well. My clients have done well. But rather than anecdotes, I'd prefer to show you some data. So if you look at this CIBC report that came out recently, they show the average purchase price of a pre-construction condo versus the price that it closed at. So when you're looking at this chart, some things to keep in mind because it can be confusing. For example, in 2022, the average person who closed on a pre-construction condo, the value was $703,000, but they paid $472,000 for it. Now they would have paid that $472,000 for it on average 5 years prior, right? So 5 years ago in 2017, they paid $472,100. And today the benchmark MLS price for condos is $703,000. So they've done, of course, incredibly well on their investment. And you can see over time what those numbers tend to look like. So I'm not saying this is how the Calgary market is going to perform, but for those of you who have never invested in pre-construction in Toronto and you're considering Calgary and you want to know historically what has it looked like, here's an example. Now we get to the biggest question that I have from investors is distance. So obviously it's very easy to make an investment close to your home. If you're living in Hamilton, you buy a pre-construction condo in Hamilton. It's digestible. You can drive by the site. You can see it as it's being built. You can see it when your tenant moves in. If they need something and you're not having us manage the property for you, you can just drive out there and handle it. So to mitigate this, some smart developers who also build in Toronto, like Greywood and Minto, have offered 2 and 3 year property management and rental guarantee programs where they will just take care of the property for you during that period of time. But of course, the inevitable question is, well, what happens after the 2 or 3 years? Well, you have a number of options. You could lease it out through a local realtor and hire a local property management firm or realtor to manage that property for you. But also, this is just the advantage of condo investing versus freehold investing. If you were buying a freehold property, a duplex, a triplex in Calgary, for sure you're going to need to hire a very active property manager because things can go wrong and you need someone on site quickly. But with a condo, of course, part of what your maintenance fees cover is building management. And anytime something big happens, you don't deal with it anyways. And so inevitably, this is a question that comes up often with some of my clients that have been with me for 6, 7, 8 years here in Toronto. And I think honestly, it's more of a mental hurdle than anything, because the reality is, you've owned a condo with me for 5 years that you purchased pre-construction 8 years ago. How many times have you actually been to that property? Usually the answer is once, during the pre-delivery inspection to make sure everything's okay. And then they give the keys to me, my team manages it, and they never see the condo again. Now, one of Alberta's advantages to landlords is that it's very landlord friendly, okay? Evictions are quick and painless. They don't take 8 to 10 months for non-payment like they do in Toronto. They happen very, very quickly. You have no rental caps, no discussion about implementing rental caps. And rental rates, because of the population growth, have surged 30% in the last 2 years. And vacancy is at 2.7%. Now, worth noting, that vacancy rate is certainly higher than Toronto's. Toronto's sub 2. But it's also the lowest Calgary has seen since 2014, and it's trending down on a monthly basis. All right, now the part you're all here for. Here's what the prices look like in Calgary. You're looking at, depending on where you are, anywhere from really $500 to $800 a square foot, right? $800 a square foot for ultra luxury rate downtown core, $500 to $600 for some of those up and coming areas that are very close in proximity and much nicer than some of the outskirts neighborhoods. And I won't go through neighborhoods in detail here. I'll probably leave that for a future video. But generally speaking, you're looking at, in the mid to low 300s for a 1-bedroom, 200s in the high 300s, low 400s, and 3 bedrooms in the mid to high 400s. So a very affordable market to get into. And as far as rental rates, here's what rental rates look like. So downtown, you're looking at $3 a square foot. We have a project right now at Fish Creek Exchange that you're looking at $2.50 a square foot. So again, keep in mind, you'll pay, $550 a square foot for a condo there, and you'll get $2.50 a month per square foot in rental rate. Well, what does that compare to the entertainment district in downtown Toronto, for example? You're going to pay $1,900 per square foot pre-construction, and you're going to get $5 per square foot per month in rental rate. So here you're at, 1/3 the price or less, and roughly half the rental rate. So of course the cash flows in Calgary make a lot more sense to the average investor who doesn't want to bleed $1,000 a month on a condo. Closing costs, not even close. So if you've closed on a pre-construction condo in Toronto, you know that it is very, very expensive. Calgary, not so much. So here's the calculation for closing costs on a $400,000 condo in Calgary. You're looking at $2,000, right? Very manageable, very affordable. You don't have development charges. You don't have your $24,000 in HST. You don't have land transfer tax, double land transfer tax. You certainly don't have. So it's just much more affordable and digestible for you to come up with the cash to close on a property. Just to give you a point of comparison, like if you were buying a pre-construction condo in Toronto, let's say your average, $700,000 1-bedroom, you're going to pay $22,000 in land transfer tax alone. That's before we even discuss development levies, parkland levies. You quickly double or triple that number in some cases. Now, I don't want this video to go on for hours, so I'm not going to go through every company that's opening up offices in Calgary and all the different things that's happening to the market, but just some highlights here. The tech sector is taking off. Everybody knows this. There's been a lot of articles about it. So you're looking at a 233% increase in tech companies since 2012. And of course, they have some of the lowest income tax and corporate tax rates in Canada. So, if people are looking at their different options in Canada saying, where do I want to live? I have flexibility. Well, Alberta's a really attractive place to live. And that's, of course, why so many people from Ontario and BC are moving there. Now, I touched on it earlier, but recreationally, I'm an outdoors guy, so Calgary is one of my favorite places to visit. You have Banff, just an hour-and-a-half drive away, one of the most beautiful places on planet Earth. You have Jasper, another 2.5 hours from there, which is even more beautiful, a little bit more remote, less touristy, more quiet. If you've never been, some of the best hikes in the world. And then, of course, you have Revelstoke, which is world-renowned, like helicopter skiing and snowboarding. So just a lot of outdoor beauty near and around Calgary. And the city itself is also great. They have lots of great restaurants. What's interesting to me is the downtown sort of core of Calgary does clear out at like 6 or 7 o'clock. So while the downtown nightlife exists in Toronto, it doesn't really exist in Calgary. It gets really quiet downtown in the evenings, but that's a minor thing to someone like me. I don't know if you're a big bar hopper, then maybe Calgary's not the place for you. But of course, you've got the Stampede out there where nobody does any work for like a whole week. I've learned the hard way. So there's lots of great things to love about the city beyond just the market fundamentals. Now let's get into the specifics, how to invest in pre-construction in Calgary. Again, if you're not familiar, PreConto.ca, we are one of the largest pre-construction teams in Canada. We help lots of clients purchase in Toronto, in Calgary, in Montreal, all across the country. If you want more information on my favorite investments in Calgary, what I would recommend doing, or you just want to have a call to talk about the market and your plans in general, you can do that at the link below. Or you can just go to preconto.ca/call and be happy to talk to you. So getting into the specifics here, the first rule of pre-construction. So if you're a follower on this channel, you have heard me say this probably 30 times. The first rule of pre-construction is to buy into a builder before you buy into a building. Or rather a developer before a development. A lot of people buy into marketing, and I understand it. These big, exciting marketing campaigns, these fluffy brochures with all kinds of beautiful stock photography and great artist renderings of a building. You've got Himalayan salt walls and beautiful $500,000 chandeliers in the lobby, and it's very easy to get wowed. But the first rule of pre-construction, in my view, is to buy into a developer before a development. Because if a project cancels 2, 3, 4 years after you purchase it, yes, you get your deposit money back, but the opportunity cost of that capital, the market has maybe appreciated in the meantime. You can no longer, with that deposit money, purchase what you had purchased back then. And so it is important that you buy with a reputable developer who has a great track record of finishing and delivering on the promises that they make. Some of the builders we work with in Calgary, for example, like I mentioned earlier, Greywood and Minto, great builders from Toronto, very trustworthy. And we've put a number of our clients into their buildings in Calgary already, and our clients have closed and they're happy with their unit. units and the cash flow is great. And so I can safely say I recommend those developers. Rule number 2, get a rough estimate at least of your numbers. And what I mean by that is you don't have to get into the nitty gritty. You don't need a 5-page pro forma that builds in inflation in your, in your landlord insurance, but you do need a rough estimate of what is it going to cost you to own and what is it going to generate in rental income. The easiest way to do that is to just go make a copy of our cash flow estimator tool, which builds in Calgary's property taxes and all kinds of assumptions. So if you say, I think mortgage rates are going higher, well, you can flip this up to 6% and you see the cash flow now goes negative $163 a month. If you think that rates are coming down, maybe it's going to be 4%. Okay, cool. I'm cash flow positive $239. But these assumptions I've made here are fairly conservative, and I've made them for a reason. For example, the assumption that I've made on appreciation is 4% because the 18-year average in Calgary is 5.4%, so 4% massively underperforming. Rental inflation at 3%, again, far below the 10-year average. So just make very reasonable assumptions and look at the numbers and say, is this something I'm comfortable with? Am I bleeding $100 a month or am I making $300 a month in cash flow? Are those situations reasonable to me? And if yes, then you know you're on the right track. Rule number 3, use your 10-day cooling period to your advantage. So when you buy a pre-construction condo in Toronto or in Calgary, you are given 10 calendar days to look over the contract and back out of the agreement. You can back out for no reason. You can back out with no obligations, no penalties to you. So the only thing I recommend that people do during those 10 days is to have the contract reviewed by a lawyer. Now, we sell lots of these, and so we know what's in the contract, and we're going to, of course, explain that to you ahead of time. But just getting a second opinion is very affordable, gives you peace of mind, and lets you know exactly what you're signing. Rule number 4, avoid bad floor plans. Kind of obvious, but in an incredibly hot seller's market, everything sells. Doesn't matter how bad your floor plan is. Doesn't matter if you could reach out and touch the gardener from your balcony or if you're totally obstructed. But in a slower market, if you need to offload that asset for whatever reason, the properties that still sell and do decently okay in a buyer's market tend to be the ones with nice views or with good layouts or in really good buildings, right? So here's obviously a terrible example of a floor plan. Here's another brutal example of just an atrocious floor plan and another bad example. What you're looking for is good, smart layouts with limited wasted space. Here's a great example of a 1-bedroom where you don't have a lot of wasted space. You don't have a pillar running through the middle of your living room. Here's another great layout. This one is a 2-bedroom, a split. So the bedrooms are on opposite ends of the unit from each other, and they both have a bathroom. So this would be great if somebody's splitting rent. There's really no wasted space in this unit as well. You've got the small den off to the side, and your living is plenty wide at almost 12 feet wide. Rule number 5, evaluate deals on merit, not on marketing. So like I said earlier, it's very easy to get wowed by a developer's fantastic marketing campaign that they spend hundreds of thousands of dollars on. Don't get too caught up in that. So this is what the typical sales cycle looks like on a pre-construction project. You have pre-public access here. This is when you go through a broker like us who can get you in at day 1 pricing. Pricing will be lowest in the building, but that doesn't always mean that it's the best deal on the market. More about that in a minute. After they sell a significant chunk, they will move into public sales. There will be a couple of price hikes along the way. And then once they reach 75, 80, 85% sold, there's typically a large price increase because they no longer rely on sales velocity to get construction financing. So if you're gung-ho about getting in a specific building for a specific reason, you're like, this is the first phase of this master plan community, or this building is right next to a future transit station, so I really want to be in this building, then of course, day 1 pre-public sales is the best time to do that. It's when you're going to get the best pick of units and the lowest prices. But if you're not that specific about the asset, if you're just saying, I'm looking for something in a good neighborhood in Calgary, for example, or a good neighborhood in Toronto, and I'm not super picky on exactly where it is, it just needs to be a good deal by a good developer, then sometimes the better deals are not the new launch. Sometimes there's something that launched 6 months ago and its prices today are lower than the new launch prices. So just ask your broker, hopefully your broker's me, but just ask your broker, what else is on the market? What does the price per square foot look like? Is there any good units left over before I decide I want to lock this one down for the 10-day cooling period? And the final rule of pre-construction is to enter the market with a clear investment plan. I find a lot of people buy pre-construction. They're just like, I don't really know. I just want to be in the housing market. Maybe I'll assignment flip it for profit. Maybe I'll close on it. My general guidance that I give people is have a clear plan. Are you going to buy this, hold it for a number of years and rent it out, and then maybe your kid's going to move in, or maybe you're going to sell it? Whatever the plan is, just make sure you know what that looks like, and never buy something you can't afford to close on. So the way you should look at assignment sales is it is a tool. If life changes between now and closing, you can sell your pre-construction condo, hopefully for a profit, and get out of that contract so you don't have to close on it. But if the market doesn't head your way, there may not actually be significant profit in that deal. And so don't buy something you can't afford to close on the assumption that you're going to be able to sell it for higher later. Just look at assignment selling as sort of a tool to get out of the project if you need to for whatever reason, but never make that your primary goal. Now, I hope this video guide was useful. If you have any questions about pre-construction investing in Calgary, my contact information is below. Thanks for watching, and I will see you guys next time.